Hello, everyone.
Hello.
Hope you're all doing well. Welcome back to another week of members markups where we go through the markups that you send in. Yes. Let's get right into it. So the criteria that we kind of use for these is to mention one good thing and one thing to improve on. So that's the format we're gonna try and follow. And yeah, let's do it. Let's start off, Burton.
Yeah, cool. So the first one was sent in on Friday. So all these markups are from Friday. Obviously, when we said send them in when we wasn't trading, but obviously here we can see that the range being the inside bar, the initiation, mitigation, and continuations. Obviously, this was a good trade that could have taken on Friday. If you missed that one, obviously there was OB in here you could have taken as well. Obviously, this person has marked up all the reaction points, and obviously seen that we've failed to close below, obviously came back up, mitigated out of this inefficient pricing that we had there, and then obviously prices then continued and they've taken this one here. So good markup. Obviously you could have marked up more for us to see, because obviously there's a lot more going on in here that we could have seen as well. But overall, a good markup. Can see that you've seen the reaction points.
Exactly. Following the direction of the intention of price delivery, seeing that stalling of price is what is essentially holding price from moving any higher and creating cause for the future. So yeah, so it's really good observation. Obviously, when we're looking at price delivery like this, where they're next to each other, we can just assume that all of this area up here is essentially that liquidity to support that future mitigation. Yes, and then yeah, your choice of entry from entering after this candle was printed is, yeah, it's good. It's good. It's really good observation. As Burton said, we'll just recommend just to do, just mark up a bit more, make sure you're kind of understanding how price got from here to here. And just taking in as much detail as you can, because essentially that's what's going to build that recognition, so you know that you can improve in the future all the time. Sweet. So that is the first one.
Into the next one.
And the second one.
Cool. So this one's a lot better, a lot more marked up. You can see exactly what you're looking at here. Obviously, I think this was new. I think this was overlapped, this one here. So yeah, obviously you can see that the breaker structures on each one is perfect. This whole move up is a buy to sell. So anywhere within here would have been a good opportunity to be looking for sales. And obviously you've marked up something in here, which I believe you said is a 15-second OB, which you might have seen, or this is a 15-second OB. One of those two.
One of those two.
Obviously like liquidity sat above here, which we've got marked in, so very good. Breaker structure, this essentially is that lower high breaker structure there, and then all of this just becomes that pullback for that lower price. And here you've got inefficiency, I think imbalance, the inefficiency that you put in here, but again, this is just an OB, so buy to sell, and then again mitigation out of that buy to sell, and a new buy to sell, which was, let me make it clearer, for me would have started here. You have this little down move, and then and then this push up reaction to the downside, causing a breaker structure, making this a strong high, and then obviously this came back in to mitigate out of that position and continue lower. But essentially you caught the trade because you saw the inefficiency that was created there anyway. But again, good trade.
Yeah, you can see the narrative is playing out. Essentially, what all that's happened here in this picture is prices been high, created a new low, returned right back to high prices to mitigate for BFI to add more sells into the sell orders into the market, and then continue their intentions for lower prices. So you see they're taking out these swing points that we're creating on this minute. And this is so you can see that the longs you're taking are following that intentions that price is moving to mitigate higher, which is, you know, a very good understanding to have on this in this price delivery based on what we get here. And then, you know, the same again, you're trading it back down to the bottom of the range, again, building your expectations. I mean, this trade for me, I mean, it's definitely a good one. Just one, you know, that you're not going to hold on for too long, but there's liquidity on your side to be run in the future. Exactly. And then again, playing that long into that mitigation. So if you're able to have these, you know, have pure understanding of what these areas are trying to aim to, then this is how you can start understanding how you can take profit on these types of trades that are inside the range, right? Especially when you're knowing, understanding where you've got in as well, knowing that this area here is not a low that will be respected essentially just because we have that, obviously those equal lows there. So you'll know that you'd want to be taking profit somewhere above these highs just based on the narrative of this being taken in the future. But yeah.
Cool. So I was going to say to this one as well, obviously if you can see the mitigation to mitigation, obviously OB here mitigated out. Yeah, I mean that just went. Cool. OB here. Just check that. Yeah, OB here mitigated out here, and then this became the new OB that's circled here, and obviously that's what prices reacted off to the right, and obviously pushed higher. Buy to sell OB, buy to sell OB. So just literally just following the money at this stage, buy to sell, mitigated out, and then obviously prices just continuing from there. One thing we did want to say about liquidity is, let's say we get a move down and prices coming back up. Just wait for that to draw. Underneath each of these lows is liquidity, and if they're stacked close together, that's when we draw that diagonal line, which obviously you've got here and you've got here, obviously being all these lows, liquidity here. But this one right in the middle, we wouldn't count as liquidity because obviously the liquidity sat at the highs. So every time prices push up, it's taken that liquidity now, which means it's just the top high that becomes the liquidity, not this whole stack. Essentially, that this move, these lows, you could have said was liquidity here, and obviously then that gets run. So this is a couple of people have done this, so it's just something we. And
there is liquidity in this move. We're not saying that there's no liquidity in here. It's just how we are referring to types of liquidity. So rather than this be up here, the correct place will be for it to have it underneath, because then what you're trying to essentially note is that this is liquidity to support that downside move after that mitigation, rather than, because this is essentially saying that this is just moving up into this liquidity created in the sell move. Yeah, I hope that makes sense. But yeah, the correct way is to have it underneath so it shows what is supporting price in that move. And over here, for instance, I mean, it's definitely personal preference, I think some of it, but for me, I'll just be looking at that as a high, and then this area here becomes more of a range that obviously liquidity has, that has liquidity sat above it as well. But yeah, there's much more to me to say on that anyway. Yeah, oh yeah, that's what I was going to say. One more thing is, notice that when Burton talked about how price moves from OB to OB, essentially, again, all we're seeing here is that downtrend, you know, clean downtrend. But what you'll notice that BFIs like to do, they will, you know, when they're printing price like this, what they're essentially doing is stripping the range of most of its liquidity, or all of its liquidity, essentially, as much liquidity as that they can get their hands on before they move price. So things that I've noticed in this type of price delivery is that out of the range, you always get essentially lower highs is what we want to focus on. So you always get lower highs, continuous lower highs out of the range, like you see here. So you have that high being printed, you have that high being printed over here, right? So that's lower, and then we have another high being printed, and again that's lower. And each time you've come to break or move below a previous low, and it's just, I don't think it's anything significant, but it's just trying to understand how they move price in the range. Well, how they initiate a range, move price inside the range, and then move price away from or in their intended direction, and then how they do that. And this is how they do that. This is a noticeable thing, is that they will always just continue to create, again, lower highs or higher lows, depending on where they're initiating price. Is that clear, Burton?
Yeah, cool.
Yeah. Sweet. But overall, good markup, good set of markups. On to the next one.
Cool. So this one was perfect. Really, really good markup here. Obviously, seen that on the 7th of December we had the FU wick that was back here, which became that OB, which obviously mitigated here. And then obviously we had that, we'll say, momentum shift down here, but we see BFI's range, initiation, mitigation, continuation, literally exactly what you've drawn down here, which is just perfect. What's to say about this one? Obviously liquidity sat underneath here. Essentially all of this underneath here is just liquidity. Underneath all here is just liquidity. And then obviously these lows become liquidity as well, which could have drawn as well. Of course, for higher prices, price moved up before it mitigated out of that range. Essentially this would be that buy to sell, and obviously to get that mitigation continuation. But again, because it's such a small range, you can just use the whole range, which is exactly what you've done here, which is literally perfect. And all of this liquidity left then just obviously gets run, and then this just becomes a full-on momentum shift here for lower prices. Anything you want to add to that one?
No, I mean, it's pretty.
Yeah, the only thing we wanted to say about this one, again, this might just be a personal preference. So if it is a personal preference, then continue to do it. But you don't need to have your stop this wide. The stop can literally just go above the highs, because they're not going to push price above this high. So obviously your stop's always going to be protected. But again, that's just something that you can refine over time. Again, if it's your personal preference to have 2 pips, then keep 2 pips if you're comfortable with that. But literally perfect markup, really, really good. Especially this down here, that's really, really good to see as well. And then obviously we're seeing those breaker structures, we're seeing BFI activity for shorts, and obviously structures to the downside. And obviously very nice catch, very, very nice catch. Everything was set up for this move here. So really good.
Indeed.
And obviously you've got the momentum as well. Obviously you've seen volume as well diminishing as it's coming up into that 7th of December FU wick, which is obviously we know as to be at OB. So again, just really, really good. Volume diminishing at a point of interest is obviously showing, what's the words? Instability. So instability in the direction. So it can't continue to move higher on less volume. It just doesn't make sense. So if volume's diminishing at a point of interest, we know that the direction can't be sustained. Obviously that's why we see that change of direction. But yes.
Indeed. Don't really think there's much more to add. Obviously, as we see, price comes and takes out that swing low. You look for the momentum shift. Several places to look. You know, if you're dependent on the time frame. But yeah, essentially, you know, diving into this, understanding what price is doing on a lower time frame. So your second time frame, and then as price is moving away and then moving back in, you know, why is it only coming this high? You know, is it something for the future, or is there something in this price delivery that we can understand? But in terms of our trade idea, right, we have all we need, because we know that they're gonna stack, initiate, and then mitigate. So it's you know, when I look at this, so I'm always want to try and understand more. Is, you know, understand more, why is price stopping there? Even though I've already got my trade and my idea, I'm still inquisitive to want to know, you know, essentially what does this look like on a lower time frame, right? So then it can help me understand why this move came in and stopped here to then cause price to obviously drop off from this point. But again, just where my mind would go on that one. On to the next.
Yeah,
this one's a set of
higher time frame to lower time frame. This one.
So
Go ahead.
Yeah, so this price delivery, see obviously price stalled, initiate to the upside, comes back in, mitigates, and then we see that cause created, mitigates, and then we see that follow through of higher prices. So obviously this is what you're seeing, and then you're also seeing where price, obviously is coming back into to create this rejection up here again. So from, as you guys see, from OB to OB. Yes, so
that was actually just a higher time frame picture as well. Then moving on to the 4 hour, I think that was 4 hour, 15 and then 1, so showing the full narrative. But yeah, carry
on. Yeah, so that's that break of structure. So on this one, that's that break of structure there. And obviously that's where we get our momentum shift, and then we see higher prices, exactly, and future liquidity being created as we move away up into this mitigation that he referenced on the 4 hour. So again, like, it's good because you can see that, you know, price delivery is very similar across the time frames. You know, it's pretty, everyone knows that, but understand the picture that he's seeing here on this 15-minute isn't one of detail. There's no need to get into too much detail here. See the bigger picture on how price is moving to get up there. But, you know, we really want to dive into the detail when we get into the lower time frames, because obviously that's obviously where we're looking to, you know, follow the momentum or get involved in a trade. But I think it's good for people to kind of know that you've got to wear different hats basically on the different time frames that you're on. So this for me is how I would be looking at this price delivery. I wouldn't mark this up in too much detail, but I can see that general flow of what price wants to do. Yeah, and I think he's kind of showed that quite well on this 15-minute and the 4 hour in showing that. Anything you wanted to add?
No, that was actually it. It was just more on the time frame thing with like, as you're going down the time frames, if you built a trade idea, let's say from like you started on the 4 hour and you can see what's happening on the 4 hour, when you're digging into the time frames, you're just confirming that narrative more and more. And that's actually what we're doing. So that's why there's no need to mark up just absolutely everything, because you just need to mark up the bits that are important to you. And that's literally what he's done here, just marking up the liquidity being cause for lower prices, the mitigation of this M1. I mean, this is inside a 15-minute candle, but obviously we've just gone even deeper to the M1 and seen that that's a FU wick being obviously an OB, and then mitigation up here, and then lower prices is just all of these here. So one thing you could have done here, I don't know if this is something that you looked at, but any of these is what I would call reaction points. So you see that the market stops here. Why did it stop here? It's because there's an OB left here. So obviously, as well as drawing the liquidity, draw on some OBs, because these are going to be the things that initiate these pullbacks that you're getting into.
Yeah, it's where, essentially that's where likely future price will react, because that's what we want to understand, right? Where is price likely to react from? And when we're leaving these areas on our screen, then we understand that when price is coming back into these areas, this is where we like to see that reaction. Yeah, so obviously you see it here on this price delivery, then again on this price delivery, then obviously again right below. And again, what they're doing here is they're just clearing out liquidity out of the range. And once, obviously, you see how they, they move price out of a range to lower prices by obviously what we know as seeing those lower highs, right? Confirming that price wants to continue until we see that momentum shift. So looking at the 1 minute, straight away, obviously we want to look at this momentum shift. So we can see that price had that swing to move above previous highs that were made into that higher time frame point of interest. Exactly. And then we're seeing that, that sideways movement, that push up, that push down, and then we're starting to see this move come in here, right? So we know that everything above here essentially is that momentum shift, because what we're expecting now is that these lower highs are going to hold essentially. So when we see that movement and that stacking of sideways price action, that move away, cause created, this mitigation makes sense, right? Because what they're going to do now is mitigate out and add their final positions before taking out, obviously, what gets left in terms of cause to support lower prices. So again, this, as I've said before, is when you're looking at momentum shifts, you want to understand them in much detail, in great detail, because even though I've gone ahead and drawn what I've just showed you, you can also look at it from a perspective of like this, right? And then you can also most likely look at it on the second time frames in terms of a momentum shift up here like this. So, but obviously we're just talking about momentum shifts on time frames, multiple time frames here. But the point is, you know, have a good understanding how price moves and how price shifts from obviously moving higher to moving lower, and all the variations that it presents. Yes.
Waiting for me.
So yeah, obviously entry, great entry in terms of where you've pulled your point of interest from, exactly as we've mentioned, and then obviously your point of entry is again pretty much flawless, understanding that your stock can go above this high because this will act as a strong high and it will be protected. Yeah, for then that obviously continuation, that cause created again to support that move again, and then obviously the big one, taking all of this liquidity and then price running lower. Yeah, good trade-off overall. I think there's one more picture in here. Yes, Ben, I guess you can talk about these bits, about the reaction POIs.
Yeah, cool. So obviously here, which is something we drew in the M15 chart, obviously you're just seeing where the price has reacted from. And obviously if it doesn't cause a momentum shift, now this just becomes that pullback to generate more liquidity to obviously continue, which obviously you've got drawn in here. So any OB that is unmitigated, so sell to buy, unmitigated OB, obviously then just becomes, after a momentum shift at a higher time frame point of interest, these just become initiations for pullbacks to create more liquidity to continue. Again, reactive here, initiate more liquidity, take that liquidity, react off something, even here, and then obviously prices went into a range. Something I wanted to say about ranges as well, which is something that you can use to identify, is if price is taking lows and taking highs, then we're in a sideways range. So taking the low, taking the high. So for example, here we've got a high, price takes that high, takes that low. Now we can assume that this is a sideways delivery. So that's a range, and obviously confirms because we get that reaction there. So anytime you see, I mean, even back here, I think this was a trade that we got into, I'm pretty sure, but it was a massive sideways range where it was taking the high, taking the low, and it was like this, but it was just a lot bigger. And obviously we see initiation, come back in to mitigate something. Essentially this would be a whole higher time frame, sell to buy, mitigate and continue higher. So just a little tip with ranges there. Anyway, any sort of sideways delivery is a range, or as well, if you're seeing the highs and lows get taken, so for here the low gets taken, the high gets taken, this is a sideways range, and again this then just becomes a whole sideways range there. Just one thing there.
All we're saying is this a range build in the higher time frames, and this is, you know, this price action you wouldn't see on a higher time frame. So this is what we're seeing on a lower time frame, and how the higher time frames are essentially creating that range between these 2 points. But yeah, it's a really, really good tip from Burton. And as you said before, Burton, with the reaction points, that they're just initiations of ranges to create cause. And that's exactly what we're seeing here, that all of these points are essentially initiating that range to stall price. So they're obviously, we know what's happening here and what their intentions are, building liquidity either side, obviously to support future moves. So yeah, ranges obviously are very important to identify.
Cool, that was everything on this one. Really good markup again. Obviously, seeing the reaction points, the cause built to move lower. Obviously, the higher time frame, momentum shift. One thing you could have put on there was obviously the momentum shift. Obviously, not that one. This would have been the momentum shift. So obviously, we've got two different momentum shifts. We've got this one, and then we've got the one which is very obvious, which is this one here. These are the two momentum shifts, and obviously this one here, so just drawing it on, obviously became that momentum shift there at that higher time frame point of interest, which was obviously that 15-minute OB refined down to that minute order block. And then once we get that momentum shift, that's when these become reaction points, any of these points here, reaction or reversal points. And obviously once we have the full picture of this a higher time frame point of interest, and we've seen a momentum shift, and now we're seeing, especially after you see this, that's a very strong move to the downside. And then obviously these, just as you've drawn in, become the reaction points for more liquidity. But yes.
And yeah, question I always want to ask myself is, this 1 minute momentum shift, where has it happened, and what does it want to cause? What does it want to create, right? Is it something that is looking to take out a swing low, right, a higher time frame swing low, or is it initiation to pull back into the range to mitigate, and then obviously continue that higher time frame bias of higher prices, right? So either way, this is going to be a real 1 minute momentum shift, because it will go on to create lower prices. So that's all we really need to know, and that's where we can obviously take our narrative from, and then look to get in when price is pulling back into the range, because then obviously that's how we're able to follow price. And the same with following these intentions to the upside. Like, don't be afraid to get into these type of trades here, because we can still capture that move up, because now we have the narrative of understanding where this cause of this price is heading, right? So we can play all of these moves. You don't have to.
Even in this move here, taking any buys up into to take out this high is just any of these opportunities here would have been, because like you might look at this and say this is, we're aiming for the high. This might only be a 8-1, 9-1 or something, but these are still trades that you can get involved in. Suddenly, if you're taking a few trades that are 10-1 and you're closing them out at, let's say, 10-1 because you're not looking to hold them, a few of them are weak, and that's 10, 20, 30, 40%. So it's just the opportunities to get involved in the move are always there. Literally just got to train your eyes to see these.
And tell yourself that you can get in them, because I think a lot of people are very tied to this higher time frame approach of only taking reversal trades,
only taking this down here. All of this is opportunity. Sorry.
Yeah, no, I mean, literally, I agree with what you're saying.
Cool. On to the next one.
Sweet. Yeah, well done, Hem. Great markups once again.
This one here,
yeah. So, go on, I'll let you start.
I was going to say, was there another one to this one?
Yeah, there's two. There's two.
Cool. Anyway. Yeah, cool. So obviously we've seen this up here. Obviously, make sure you're looking left to see where prices reacted from. If we are getting momentum shifts, just make sure you are seeing where they're coming from. Always ask why. Why has this momentum shift happened here? Obviously, again, you could have marked up this range, initiation, mitigation, continuation for something there. Obviously, seeing this inefficient pricing here. This was perfect right here. Obviously, seeing that range. This is inside a larger range. So obviously, sideways price delivery. Again, take the lows, take the highs. We can identify this as a range now. And obviously, sideways price delivery. And then you've got a range inside the range, which is perfect. And obviously, there's full-bodied OB, which are really, really good plays on EU when you get them full-bodied OBs, obviously from the markup in the week. Yes, I mean, this one is, unless you want to say more to this one, this was another good one. You've even put the one down here as well. Obviously, range, initiation, mitigation, continuation.
Yeah, exactly.
Always happening. So range, initiation, mitigation, continuation. But obviously, we can have for the price to move back up, we can also get another range, initiation, mitigation, continuation back into this bearish price delivery. So it's good that you've noticed that one as well.
This is how price has to move in order to create higher and lower prices. Yeah. So you're always going to see, you could be two people looking at the same price delivery where one is expecting a short and one is expecting a long. And it's because that most likely you're both looking at this, right? This type of price delivery, but in opposite directions. So one person might get into a trade that runs 5% and then comes to take them out, and the other person obviously gets in at that mitigation and their trade runs, plus 10%. So it's not that you're seeing the wrong type of price delivery here and you're getting on, you are getting on the wrong side, but you're seeing the right thing. But from a logical standpoint, you might not be following the narrative of price delivery and what the intentions of the BFI are trying to create, right? You're not taking that higher time frame or full picture narrative down to what you're playing, essentially. So yeah, if some of you find that, then understand that it's not a bad thing because you're still observing the right type of price delivery, but you're just going to be on the wrong side of the market at times because you're not playing that higher time frame narrative.
Exactly. Yeah. And this was just more, if we look at this range here, this range, which we see when we're going to look at the next picture to the right, was just to create liquidity for that continuation down. And obviously knowing and understanding that the momentum is bearish and you're taking something against that higher time frame momentum, there's nothing wrong with taking it. You just have to understand what sort of trade it is. So if you know that it's a pullback trade that you're in, and we're seeing price, struggling once we're breaking these highs, we're struggling to break these highs again. Obviously, you can see that we're in a pullback to obviously create more cause for lower prices. So just understanding what sort of trade you're in. There's absolutely nothing wrong with taking these trades.
Exactly.
Just understand that you might want to take profits.
And even that move, right? That move, if let's say you do take that long, that move might only work out to be, let's say, 10 pips. But understand that 10 pips based on the type of stop sizes that we use can be a lot, right? Even 8 pips. And then understand that once your account starts to grow and then you're seeing, 10 pips could equal 10K in a time, or it could equal 100K. So don't feel like you shouldn't be looking at these types of trades, or you don't really want to understand these types of trades because you don't want to be in them, right? There's offering here for you to be able to take these trades if you obviously choose to. So I think for me, that this says that I want to be aware, because then I can choose what I do. I could rather choose to take the small trades, right? Or I can wait and take the big trades. But whatever happens, I'm always understanding the purpose and the intentions of price delivery at that time to be able to obviously to get involved in the move.
I was going to say as well, to add more to what Chuck said, if you are taking these sorts of trades, at the moment we're looking at the M1, but next year we're planning to really go in with the second time frame. So let's say you've got into this trade and it has run 10 pips, but let's say your stops, I don't know, a pip or a 0.8, you're still looking at, a 10, 1 to 10, 1 to 15. So it's good to start training your eyes to see these sort of price deliveries happen over and over again, because let's say you've taken one up here, you've taken one up here, one down here, and you're literally getting involved in all of these. This is just massive percentages you're going to be making daily. I mean, you can do this on the M1, but even taking this to the 15 second as well and doing this, that's potentially in, if we're starting here, that's potentially a 2-3 hours trading, and you've made 10, 20, 30, even maybe 40% on a good day, and you're doing this daily, and this is for 3 hours a day. So imagine just trading for a couple hours a day and just making crazy profits.
And this is our goal. This is our goal. This is how we want to end up trading, where we can come to the chart for an hour a day and make as much or as little as we want, and really have that kind of freedom and that choice in how we operate in the markets. And I think it's very possible personally. We're touching on that type of approach to our trading at the moment. We tend to trade when we want. We don't, we don't feel obliged to you know, get up at a session or only trade a certain session or only trade at certain parts of the day. We trade at any time of the day. So we see that, you know, being able to hone in on this skill just confirms that in the future we will be able to come to the chart for an hour a day and fulfill all of, you know, our needs that we can in that time frame, and then move on with our day.
Yeah.
And this is the power again of, you know, this financial industry and investing in yourself and being able to have that type of lifestyle. And that's what we're trying to create for ourselves at the moment. So moving on to the next part of the day. So yeah, as Burton said, or last left off up here. So this is where we see that initiation of essentially that pullback to create liquidity for the future. Right. So what you've obviously done here is marked out the lows and liquidity and the ranges initiations, which is great. I think this is a good picture for what Burton was mentioning earlier about the liquidity, and about how essentially this becomes liquidity, this one becomes liquidity. But once this is taken, right, obviously this is no more. Like the way I like to think of this is to kind of illustrate this picture, where I would kind of understand how this drawing is put on is essentially, if we was to look at liquidity like this in here, right, as price is coming up, right, we're moving into that liquidity, right, and soaking it up, moving further into that liquidity, and then obviously, right, take as much liquidity, well, at this point there's enough liquidity and obviously cause created for them to initiate price to the downside. But like I said, generally you just want to look at highs as highs and lows as lows. So if we're seeing price action like this, understand this is your liquidity. Once this gets taken, then this is your liquidity. Yeah, exactly. And on the downside, obviously this is where we want to be drawing our diagonal line. Hope that makes sense. Yes.
Just to add to that one, the reason why we draw diagonal liquidity is if we know that there's liquidity above every high and below every low, once a lot of lows are stacked together, we can just assume that that's a lot of buy orders essentially, and obviously breakout orders that are sat here as well. So that's why we're drawing diagonal liquidity, is to identify that lots of lows stacked together. So obviously if price is moving up like this, these two lows are not stacked together. This is stacked together. This is not stacked together. These are their own individual points of liquidity here.
Weak swing point.
Sorry.
Yes, no, that's all good. Yeah, so yeah, range. I think this price delivery here is really nice to see, because you see that their intention here is literally to create, well, to one, wipe out the liquidity out of this, you know, this range, is how they're initiating this this contained price action, but then how they move lower to run the lows and then obviously come to run the highs. And it's exactly what we want to see when we're seeing this type of price delivery. We want to see that cause is being created and respected. When we say respected, meaning that cause was to support a mitigation and obviously continue in the trend. So yeah, so I hope, I imagine as well that it's, you know, it's becoming really, really clear to you guys seeing this price delivery. But again, I think it's a good picture to understand how price started here, created this cause, and then obviously ran both the high and the low before obviously continuing in lower prices. Yes, so I kind of left off this point. And then, yeah, so this initiation of, you know, out of this lower time frame reversal, and then seeing how that obviously price is supporting that up move. So just in this price delivery, you see you've marked off this candle here, which is great observation. This is essentially what's holding that range and holding, right, this liquidity down here for a future, to support something in the future, right? So, yes, what Burton is drawing up here as in that momentum shift. So again, you're seeing cause created, both sides of the range taken, initiating price to the upside, price holding, right, in these mitigations. You have that range, break of structure, momentum shift at a point, at a reaction point, so a point of mitigation, right, again, to hold the liquidity above here now. Right, this becomes something for the future, price holds, moves away, and how do we know price is creating, well, there's a real 1 minute momentum shift, or we know that we can trust the high when we start to see price mitigating away. And that's what obviously he's drawn in here, where we have that range, right? Initiation away, no mitigation here just yet, but we see the same thing again, range, right? Move away, and it comes back to mitigate, and then price continues to create lower prices.
Beautiful price delivery right there.
Definitely. And
range,
again,
initiation, mitigation, continuation.
I've mentioned this before, but just understand how symmetrical this price action is, right? How this side of the move, right, is supporting this side of the move. Right? And it's that price delivery that's very common. It's what we see, that price holds the middle of the range, breaks it, respects it, and then continues, right? Reverses because it takes the bottom of the range, and then obviously has that reaction, that cause for higher prices in this. You know, this is a 1 minute. You see this price delivery on every single time frame. But yeah, main thing is just how this side is, and the cause that's being created is being used and respected on this side. Yeah, definitely beautiful price delivery, all inside this sideways price action as well, this range, high time frame range. You know, before you'll just be looking at what, 15 minute candles, maybe 30-minute candles, and not really, you know, paying attention to any of this. And now, you know, now look at what you guys are capable of, actually going down lower and understanding exactly what this price delivery is presenting. And again, you don't need to be able to trade this right now, right? There might be no trades in here, but over time, you're going to start taking them, because you're going to, with that understanding of what you're seeing in the moment, you will start thinking about decisions and when to place trades. It's all a part of the development. But yeah, all good.
Cool.
Next one, 2 more.
Put your sunglasses on for this one.
I think they're ready on.
Cool. So obviously we can see that you've marked up literally everything in here, which is perfect for us, because when you guys mark up everything, we actually know what you're thinking. So obviously you can see that you're following the mitigations from up here, following them down, following the money, which is literally just perfect, obviously all the way up until this trade, which is just really, really good. That you're seeing the mitigation to mitigation. Again, here you're seeing that bullish price delivery, range, initiation, mitigation, continuation again. And then obviously you're just taking it on the next one, which again would be a sideways range, initiation, mitigation, continuation. Obviously didn't continue. But again, it's a beautiful markup, because when you send in markups like this, we are able to see everything. So if you've only got a couple of things marked up, it's good, because we're able to, we can understand what's going on, but it's good for us to see what you're doing and your understanding, so that we can give you more detailed feedback. But here, it's not the easiest.
Just to quickly say on that, it's not the easiest thing to mark up. It's not like you're just going to come to the charts and mark up every single thing that's on the chart. So don't have that expectation. Just know that every time you do mark up, you're going to present yourself with something new or something more, and each time you're gaining that you're developing that skill for marking up in more detail and more detail and more detail. And obviously then presenting that to us again may not be the easiest thing, but just do the best you can. Whether you have to send us 8 screenshots or 1 screenshot that we have to zoom in and out of because you've got a wide screen, however you feel you can best represent your understanding in that markup, because then that's when obviously we can provide more accurate feedback. But yeah, it's not an easy task, but understand it does get easier. It does get more fluent, and it turns out it's very enjoyable for us. That's for sure, because just being able to sit down and really take in why and how price is moving from a factual perspective, not from a I think this and I think that, what has actually happened. It's a nice place to be, and to learn from.
Yeah, so cool. So what I was going to say with this markup here, so you said these entries here that you got marked up, but something that you did mark up here was that, as you've said, trend change, which again is just a momentum shift. So obviously momentum shift here, obviously didn't get that pullback that we would normally expect for that A to B, B to C leg, which will be from here. So that obviously became a future POI, which we see as respected here, which then became just that pullback back into that mitigation to then continue lower, which is obviously where you took your trade. But here we're at a higher time frame point of interest, and obviously we've seen that reaction and we've seen a momentum shift here. So obviously you're trading against the momentum when you're looking at both of these trades, and obviously that's why they only became reactions for more liquidity to then continue lower. And again, you've got it marked up here as a momentum shift, and here is a momentum shift. If we're not seeing that, sorry, let me just draw this on again. If we're not seeing that B to C leg, this bit in here, then that just means that this bit just becomes a future POI, and obviously we see it respected here. So no pullback into that B to C. So obviously we would expect B to C continuation. Sorry, let me clear this up. So obviously we've got the momentum shift here, but we've never got that pullback. So obviously then that just became a future POI, which was obviously respected here. And then again, this has happened down here. So we get that no B to A to B, B to C leg. And then again, that just becomes that future POI, which was that reaction back into the buy to sell OB. And then obviously that's where you're taking your trade short there. So, and again, with the liquidity, perfect, because you've drawn all the equal low liquidity there. You can see liquidity sat underneath here, and the liquidity above here. So perfect in terms of drawing the liquidity, even here, absolutely perfect. But again, just focus on momentum shifts at POI. So if you're getting that momentum shift at a higher time frame point of interest, these become quite important. And obviously then just that B to C leg, which if we don't get a mitigation straight away, this becomes a future POI, obviously, which was then mitigated here and here. That was everything from that one that I saw.
So just to add on to that, so when you're seeing this type of price delivery where we run above, right, cause, and we have that momentum shift, right, the aim for this price delivery, right, being together like this, is to take out a swing low. And when we're looking back at this price delivery, all of this, right, and we ask ourselves where the swing low is, right, we can say here. So when you're trying to take that continuation trade because you've seen this as an initiation, right, there's two reasons why I would not look to trade this long, and I would look to rather get into possible shorts that are here. And that's, yeah, one, because obviously we have equal lows, so I want to trade into that, right? I don't want to trade against that. I want to trade price as it's moving down into these lows, because I know that this is more likely to get taken, right? And then rather than trying to buy above these highs, because again, I know that my stop is going to have to be very big because it's not very protected being underneath this low or underneath this low. And then the second reason, and I mean, they're both very important, but the one that kind of stands out for me is understanding, sorry, I've gone through both of them. One being obviously the momentum shift. Here would be that my idea then of the narrative of and what the BFI intentions are to take out the swing low. So if I know the swing low is here, I'm not trying to buy above this level, this price level, because I know that there's not much that's going to want to support that momentum to the upside until we get cause that is going to be below these equal lows to then create higher prices. So I think it's just quite two quite easy things. I think that can stop you from getting into trades like this. So yeah, obviously I would heavily go against looking at these entries. Rather, just completely flip your bias and say you're looking for shorts, and then force your entries. Where could I be getting in? Obviously, this is more second time frame entry, but it is there. And then now you understand that being in this trade makes sense, right? And then seeing this momentum shift here now also makes sense, right? Again, equal lows created again, right? Corrective run up, mitigation, as Burton says, and then obviously that continuation in price. But yeah, hope that was clear. But yeah, two easy things that can kind of stop you from getting involved in these types of trades.
Cool.
Last one.
The next one.
Let's quickly say trend change of the sales, mitigation dotted line.
And as well, if you're saying it's fine, absolutely fine to use your own concepts of trend change, just understand that is exactly the same as a momentum shift. And obviously what we said before about there being, if there's no B to C leg, then obviously that just becomes future POI. So yeah, just, I mean, if that goes to anyone doing anything. If you want to take these concepts and really make them your own or call them whatever you like, that's fine. Just understand the logic behind them. That's what's most important.
Yeah, exactly. And there's one more thing I just wanted to mention here that was after that, was when Burton was talking about this price delivery down here. So when I'm looking at this price delivery and I'm looking to take this, possible reaction point in here for a long, again, just understand that you're taking longs into this area with this below you. So again, you wouldn't look to get into this short. So for me, when I see this type of price delivery, when we haven't come back and tested, right, what price is going to do is run straight through it, right? Because there's essentially all the calls is being created up here for that run of price, and you're unlikely to see, well, like I said, you can obviously see the reaction point, but price is obviously going to aim just to wipe out that zone. So price typically will just move straight through it, as we see. It just becomes a void of liquidity, essentially. That supports price. Cool. On to the next, last one. Cool. It's a fairly simple one, but this one was sent in with a descriptive paragraph. Can we take the lead on this one?
Yeah, so again, cause, obviously you've seen the cause that's been created on both sides. So again, liquidity is perfect. Just make sure you're looking at all of this as well to see obviously what prices reacted from, which again, we said that in someone's previous markup, but any of these reactions that we get right, make sure you're just looking less and asking why and where. So why are we getting reaction here? Where has it happened? And obviously find out, because this is obviously going to help you to understand what's happening, on if it's a real momentum shift or if it's just cause for lower prices, or so on and so on. And Chuck said earlier about symmetrical price. Sometimes you'll see as well, let me just clear this up. Sometimes you'll see as well, if price is moving up, sorry, just wait for this to draw. If price is moving up and obviously we've got liquidity sat here, sometimes price will move down, stop literally at these lows to create more liquidity, and then obviously move slower as well, and then this just becomes a ton of liquidity, and that's where you'll see price really just drop after that. And then this will be the next part, and sometimes it will just come back down to here, create another equal low, obviously being more liquidity, and then create more liquidity, and then that's where we just see price just start dropping. So obviously just make sure that you're looking left to see where we've reacted from, because it's going to help you to build your cause. I'm sorry, to understand the cause. But apart from that, this was again perfect. We see obviously the mitigation of the OB, which you've got written in there, cause for higher price, cause for lower price, being obviously all this liquidity under here that you've got written in, and then prices obviously just dropped. These are good as well. These are good trades that you can take, which you've got marked up here, just range, initiation, mitigation, continuation, which you've got there. So again, perfect. And even up here, you've drawn the other ones in as well. Obviously mitigations. These just became, obviously after this momentum shift here, which was after this reaction here, these just again became reactions, and you're seeing these reactions. So let me just clear this up. You're seeing these reactions of these OBs, or even if that's a range, I'm not even sure if you drew the range or the OB, but you see that these reactions just create cause for higher prices here. So reaction, no follow through, meaning it didn't break the swing low. So then now this just becomes momentum is still bullish. But yeah, I mean, everything apart from that was just perfect. Obviously up into here, there was obviously trades underneath here that you could have taken as well. Obviously would have been very small profits. I mean, these are like a 1 to 10, I think. And again, here there was opportunities. Again, it's market closed, so you probably wouldn't have taken that one. But there's more opportunities. There's opportunities everywhere. Literally
just don't.
After you've missed this, just wait for the next range. Wait for the next. So if prices drop like this and your entry's way up here, just if this happens to us, we literally just wait for the next range, initiation, mitigation, and continuation, and then we're getting in the next move because
we're identifying where they're looking to get back in.
They've stacked enough positions. They've stacked enough of their orders up here to move the price all the way down here, but now price has stopped down here and reacted off something down here that's given a decent enough reaction for a pullback. So want to just be looking to see the next range, initiation, mitigation, continuation, because if nothing's changed, then they're going to continue to push the price in the direction that they want it.
And obviously that comes from understanding what that first mitigation and momentum shift that created these lower prices, where it was actually at and why this happened. Because if this is now a higher time frame mitigation that has a possibility to create lower prices, then we know that the intention of this void in here is not to get respected anytime soon, right? And price will just continue to hold this liquidity. And then what does this become? This becomes a higher time frame point of interest in the future, for the future, right? And this is how we see this obviously price get delivered. And then just to take it, I think there was 2 questions actually in here. One was, I can't remember the second one, but I know one was, she was asking if we would take a trade from, was it this POI? This line here, pretty sure.
Yes.
Which
it was.
I think, as Burn has explained before, I can't remember if that was on the call actually or was in a private one, but I say we, but Burton doesn't say me as much, and I'm definitely more versatile. But our typical trades from these types of setups would be to wait after the mitigations happened, and then get into a trade that presents itself.
Like this one, literally this one here.
Yeah, the one.
Well, and the reason for that is you've just got everything on your side. So you've seen a mitigation, then you've got a momentum shift, which is confirmation already that's going to play out, and now you've got BFIs initiating more positions. So it's just everything is stacked on your side. So that's why these trades are really, really good.
Yeah, definitely better. So yeah, we don't tend to take ones like this. I think this is like more higher time frame type perspective in terms of people that trade smart money. But what we would do is wait for that reaction, and then obviously have this our expectation to that obviously we're going to see lower prices, and then look to obviously wait for that intention created to cause lower prices, and then obviously look to get in. And yeah, I think that was both the questions. What one would we take?
Yeah, I mean, there was something previous that you asked as well, when we were talking in the questions, but you don't need to see much more than a momentum shift at a higher time frame point of interest and BFI activity. When you're seeing BFI activity after a momentum shift at a higher time frame point of interest, and you're seeing that bearish price delivery in this case, pull the trigger. There's no reason not to. In that case, that's all you need. Just
should be ask yourself, what should you be, if your narrative, if this is your narrative at this point, at this price level, what should you likely see? And there's only one way price can move to create higher or lower prices, and that's in the form of a momentum shift. So if you're getting a momentum shift at a point that you have an interest in, play the trade, play what you see, right? This is what we want to play. This is what we want to play, these types of moves. Okay, you won't be right all the time. I can understand that. But the process as a trader that we're trying to create here is to act on what we see, right? Because that's when we need to pull the trigger. And if that's what you're seeing, and if your narrative is built, and you, even if you're not as confident, but still you have to kind of gain that confidence through the experience of pushing that button. But just push the button, right? If you're wrong, you're wrong. This is perfectly fine to be wrong. Our stops are very small. you know, you can get sucked out very quickly. So yes, we can be wrong, but that's just for the entry, but the narrative can still be correct. So just make sure you're playing what you see, and you're playing your narrative, because this is the process you want to have as a trader, especially when it comes to execution.
Cool. Also, one more thing I wanted to say here is, let's check my mouth. These trades here. So let's say, obviously, you said let's say you've missed this move, and this is an opportunity to get involved. There's plenty of times I've missed this move, and I've got involved in something down here, and this has still gone on to make 15-20%. So just if you miss a move, just be patient, and again, just wait for that next price delivery that you can get involved in, because who says this isn't going to drop and make another 30-40%?
Exactly.
We don't know.
And it gets presented straight away. Let's say Burton took this position, he's got in here. Let's say he was like, nope, I'm going to hold, I'm not going to close any of my trades. I'm going to hold all of my full percentage on a trade, and then he gets stopped out, right? Break even or stop loss. He then walks away from the screen and says, I'm not doing this anymore. And then look, there's another opportunity in here to play the same narrative, right? He was playing here, right? Exactly the same, to take that short. And if you miss that one, right, he has another opportunity to get back in again. So it's understand that you don't, if you was wrong here, it does not mean you're going to be wrong again. Doesn't mean just take every single trade. I'm just talking about the narrative, right? If you're playing that narrative and this is where your entry is and it gets taken, don't think that you can't get back in and you can't play that narrative, because you can, right? There's multiple entries.
Even just another example on the opposite side, let's say you've missed this move here and price has gone, and you're like, oh, price has gone without me and we're way up here. Now, what do we get again? Range, initiation, mitigation, and continuation. You still got involved in that move, and that's easily another, I don't know, let's say 10 to 15% that you've just taken. So just don't get disheartened if you're missing moves, and pull the trigger when everything's in your favor to you.
Exactly. So even if you're wrong, it doesn't matter. The goal here is to build that strong process of executing, because there will come a time when you're not wrong and you want to execute, and you're gonna want yourself to execute. So work for those moments. Don't work for the current trade you're looking at, because otherwise, it's just you'll be putting all your trading career on one trade, and you just don't need to do that.
More painful to not take the trade and watch it run rather than to take it and take a loss if you're wrong.
I'd much rather take it and take the loss than to sit by and watch it go, which is definitely a personality thing. But I think it definitely can, trading can cripple you to executing just because of your previous experience. But just understand now that with the information you're learning and feeding yourself now, is that you don't need to have that type of fear anymore, right? So just take your time and build that confidence to execute.
There's opportunities every day as well. We're trading at M1, so I mean this price delivery here. I mean all this price. Sorry, let me just draw on there. This whole price delivery here. I mean this is a day's. I mean, is this a day's price? This is a whole day's price action. Look how much opportunity there is in just one day. So it's just, even if you're, let's say, for example, having a bad day and you've taken a couple of losses, it's okay to just step away from the chart and come back tomorrow, just as an example. I mean, I know we said before that if you've missed this, then obviously wait for the next one. But if you're taking multiple losses in a row and you're really having a bad time, then just step away and come back. There's absolutely nothing wrong with that. And
don't carry it through to the next day. What happened yesterday was yesterday, right? What you're looking at today is today. You can't carry through the emotions that you had yesterday in the market, right? I mean, if you had any emotions, I'm not saying you did. But obviously the goal is to come to the market every day with good expectations about yourself and about your ability, right? Good expectations about your processes, and your understanding of how, price moves and how price is delivered, right? Come with that good intention every single day, because again, this is the type of person that you want to create. This is the person you want to be in the future. So you do that now. Do that from now. Don't start your day thinking about yesterday. It's just gonna you know, continue the emotions when there's really no need based on the way we trade.
Exactly.
Abundance.
Cool. That's all the markups done.
That's the markups done.
We wanted to go on and talk about improving both technical and through the logic. So obviously technical, which is, again, marking up, training our eyes to see these price deliveries over and over again, understanding what causes built, and just taking the concepts and really understanding what's happening on the charts. So obviously should have started with logic, but technical is obviously just training our eyes to, and we do that literally. We've done this by just marking up, reviewing moves, understanding why, just asking why. Ask why is price stop here? You know, why is all these lows stacked together here, and so on and so on. And that's obviously how we understood the diagonal liquidity, and, you know, stacking highs and lows together. And
you may not get your answer, your technical answer. Like when we, like, just to add on to what Burton said quickly, when we say technicals, we are talking about like the tools you use to mark up your trades. To mark up the charts, right? So that's your ray lines, or your boxes, or your support and your premium and discount, or, you know, however you're marking up your charts, right? Obviously, you're not just plotting any line. You're plotting a line based on a narrative or an understanding you have based on that price delivery. And it's the skill of being able to identify what's happening at that point is that technical ability, right? That, okay, this is the tool that I'll use, or that's the tool I use, or this is how I identify that type of price delivery, and this is how I identify this type of price delivery, right? It really comes together through that training your eyes to see, and that's where we're talking about that improvement, and where you want to kind of monitor and progress your improvements, and then obviously we can get onto the technical. I was just going to say,
just to add to that, every single move in the market, I don't care what it is, every single move has a logical reason as to why it's happening, and that means that once you've finished trading for the day, or you're coming to markup at the end of the day, you're going to find the reason for every single move. So even if you don't know the answer to the move, maybe just save it. Even try and figure it out on your own. Message us and say, we've tried to figure out this. You know, why didn't I've looked over it. I tried to find a why, but I couldn't understand it. Can you help me? Because then at least you've gone through it yourself, tried to understand it before you've come to us, and that's just perfect. That's exactly what we want to be doing as a trader.
Yeah. It's a perfect learning cycle, that to be able to work out yourself, go through the challenges, understand where those challenges are, and then, you know, seek that help or that confirmation, right? And then, you know, solidify that learning, or that improvement, or that awareness, or, you know, gain of understanding that you've created, right? And if you're doing that time and time again, then this is, you know, essentially what's going to keep you progressing and improving.
Cool. So again, so then we want to talk about the logic of why things happen. Again, this is just more why. So we're just, all the time we're talking about the concepts. So obviously the concepts of you can break down price delivery into ranges, you know, inside ranges, then initiations, then cause built. All these things are different concepts, and they all have logical reasons and understandings behind why they're happening. So we'll literally sit and have a 2-3 hour conversation about ranges, for example, because it's just these things. This is what really drills in your understanding behind the logic of why things are happening, and even talking about it, or finding a place to just sit and think about it, think about ranges, or think about price delivery, or think about cause. It's just really gonna,
the whys as well here. Think about the whys.
Exactly. It's more gonna solidify the concepts in your mind, so that when you come to the charts and you apply the technical, you know, training your eyes to see these things, it's just, you're going to get these just light bulb moments over and over again. And that's how, obviously, where you get better and better. But just this is how we got better. And what we're doing with the markups, what we're doing with the videos, is sharing exactly what we're doing. So we're marking up every single night. We're obviously trading. Obviously, when we say that we want to, we're only going to say things. We're only going to tell you to do things that we're doing.
We're
not going to tell you to go and backtest this or backtest that. You've never heard backtesting from us because we don't backtest. There's no reason to. If you look at the M1 every day, this is plenty of data for us to go through every day, and marking up the charts is going through the logic. So when you are marking up, think about logic. Think about looking at the chart in terms of a logic. So
what are the intention?
Yeah, you're training your eyes with seeing it on the chart, but then mark up the logic. So if you're seeing a bearish price delivery, write out a bearish price delivery, draw it out with the pen tool. So you're training your mind to see these things over and over again. And you'll see more. You'll see so much. I mean, even in the past week, I've gone from really understanding price delivery to a new level, and that was after just talking with me and Chuck's talking over last weekend, and then coming to the charts and just seeing more. And obviously that turned into just making more percentage. So
exactly, it's
just really dig into the concept. That's what we're trying to get here.
And I think that's the difference. I feel that, you know, for those people that have had a history in trading, right? So in your trading career, you know, you've been with previous courses, or you know, you've failed, if that's the word to use, at you know, whatever you've done previously, and you're here now. Just understand that this way of trading isn't the same as before, right? It's not. I don't want to say it's guaranteed, because obviously it's down to your ability to perceive and understand this information, and then obviously execute in the way that works for you. But you know, this stuff works. So just take your time with it. Understand that you don't need to have that fear of failing again, right? You're not going to fail with this information. That's, again, I can't guarantee that.
It's evident.
It's very evident
from the first couple of weeks on markups. People that have been with us for, you know, we're in week 7 now. So this is people that have been with us for the first couple of weeks. We're seeing massive improvements. Massive improvements, especially recently, from your understanding. So it's proven that all of the information that we're sharing with you you're able to see it as well. Yeah. So as Chuck said, just take your time. There's no rush. Like, you're going to see this eventually, and when you do see it, you're going to see percentages. So, sorry to.
Yeah, no, I think it's a good point to kind of illustrate. And it's just don't let yourself don't stop yourself from progressing. Every time you I mean, anyway, sorry, I wanted to keep this discussion positive. So, you know, well done for where you are currently. You know, pat yourself in the back and tell yourself, this is just at this stage. Imagine where I'm going to be at the end of the week. Imagine where I'm going to be at the end of 2 weeks, at the end of the month, at the end of the year, right? At the end of next year, right? This is what we talk about, right? It doesn't mean we miss the moment, because if you see from the way we trade very in the moment, right? We want to be aware of everything in the moment, and that's the type of people we are. We enjoy every moment that, you know, we can experience, but we do talk about the future and where we want to be. And like, you know, funny enough, this is, you know, everything is unfolding. I say everything, but things are unfolding exactly how, you know, we projected them to be or spoke about them to be. So just, you know, just be proud of being here. Be proud of being able to discover NJAT on Instagram or wherever you found us through recommendations or word of mouth. But just be happy that, you know, now you have information to really secure yourself in terms of your goals and your financial future and etc. So yeah, you know, you have everything in your favor. Stay positive, you know, and enjoy. That's the, you know, that's probably the most important thing that people forget, is that this is an experience that should be enjoyed. It's not something that should bring pain or sadness to you. But getting back into improving at logic, obviously I think that does definitely come into that subject as well. But to talk more about that is, you know, as Burton said, we sit here and we're really trying to, you know, throw ideas back and forth, not random ones, but ones that logically make sense in, you know, the intention of price delivery. Why is price delivering this way? And really building that logical understanding that, okay, we have, you know, mitigated or had a momentum shift at a higher time frame point of interest, right? That is following the momentum on a higher time frame, or it's following structure on a higher time frame, right? We're bringing this full picture of this, understanding of purpose into our trading as well, along with our technical ability. And these are the two areas essentially that you want to make sure you're improving in, right? It's not about the trade. It's not about the where you place the trade, whether it's this OB or that OB. It's essentially gaining these two areas, because over time, trust me, the trades are going to come and they're going to be as accurate as you can ever be. But that obviously comes after having that good skill set under those two areas. So improving at your technical ability, so training your eyes to see it on the chart, and then also improving at the logical understanding of the intention and purpose of that price delivery that you're looking at that time. Constantly improving these two areas, and yeah, you'll be pretty good, as I'm sure a lot of you are already seeing. That these two areas are kind of all you really need to kind of secure some great trades.
Cool. Yeah. So I mean, that was everything that we wanted to speak about today on this video. Unless you wanted to add anything more, Chucks.
That's all from me.
But yeah, again, thanks for sending in the markups, guys. Really good markups.
Yeah.
We're seeing great improvements from yours. So obviously, again, just more continuation. And obviously, thanks for watching. Let us know your takeaways from today's video, and let's have a focus week.
As always,
yeah.
Smash weeks again.
Thanks, guys.
Appreciate your time. Speak soon.